Good morning and a happy Wednesday. Welcome to today's episode of Morning Well. Thunder and lightning here in Singapore may be a sign of what to expect in the markets today, but let's see. Three things that we will talk about. Ant Group's 35 billion IPO derailed, China's plan to double in size by 2035, and do elections matter in the long term for markets? US stocks rose Tuesday as millions of Americans headed to polls, setting markets up for a second consecutive session of strong gains. The Dow was up 2.1%, S&P was up 1.8%, and the tech-heavy Nasdaq was also up 1.9%. Financial shares led the way, enjoying their best day since July. The yield on the 10-year treasuries climbed more than 4 basis points to 0.89. That's the highest in 5 months. The dollar dropped against all of its G10 peers. Aussie was among the strongest performers. Gold gained and Asian equity futures are mixed. Historically, stocks have fared well on election day. Ahead of Tuesday, the S&P 500 rose 0.8% on average on 9 days from 1984 to 2016 that Americans went to polls to elect a president. The index climbed 7 of those occasions. In Europe, the Euro Stoxx 600 added 2.3% on optimism about global economic growth prospects. In Asia, most benchmarks advanced. The Shanghai Composite was up 1.4%. Hong Kong's Hang Seng was up 2%. Japanese markets were closed for a holiday. Ant Group's 35 billion IPO was derailed. Beijing has told the company that it cannot proceed until it meets new capital requirements, including at its lucrative micro-lending units and other restrictions imposed on financial conglomerates this month. Its units will also need to reapply for nationwide licenses. Shanghai suspended the listing, citing changes in the regulatory environment. Hong Kong debut is also on hold. Alibaba tumbled as much as 9.7%. Alibaba owns 33% stake in Ant. What led to this? Why this sudden development? The story goes that 2 weeks ago, Jack Ma somehow found time to opine on China's banking system at a high-profile financial forum in Shanghai. In that speech, apart from labeling the global banking Basel Accords as old people's club, Ma said systemic risk is not an issue in China. Rather, China's biggest risk is that it lacks a financial ecosystem. Chinese banks are like pawn shops where collateral and guarantees are the hard currencies. Obviously, the comments were not taken in the right spirit, and hence we're seeing this kind of a dress down that's happening. But it'll be interesting to see how this thing develops in the next couple of days. On the earnings side, cloud computing firm Arista Networks surged 16% after it raised its outlook for the fourth quarter. PayPal shares dropped about 4.5% after it released expectations for next quarter earnings that were below estimates. Bayer boosted the cost of settling Roundup lawsuits to $2 billion from $1.25 billion. BNP Paribas rose as debt and equity trading beat. Loan loss provisions were better than expected. Lenovo reported record quarterly profit helped by PC sales to meet remote work and study needs. Aramco left its dividend unchanged, even with a 45% drop in third quarter profit. China's economy can reach high income status in 5 years and double in size by 2035 is what Xi Jinping said, as cited by Xinhua. That implies an ambitious annual growth rate of almost 4.7%. The World Bank estimates China's per capita GDP to be about $10,400. High income starts at $12,375. More details of the plan include steady and prudent yuan internationalization, supporting Beijing, Shanghai, and the Greater Bay Area as tech and innovation centers, and strengthening domestic oil and gas production while also promoting clean energy. One last point on the election that I wanted to make was despite the focus on the election, the long-term implications are less significant than most think. And I couldn't agree more with this analysis by Jason Pride, who is the CIO of private wealth at Glen Medie. The firm broke down market performance by presidential administrations going back to 1872 and discovered that the market's long-term performance, regardless of who held the White House and Congress, was no more than 1 to 2% different than the overall average. A lot has been made of this election. It is an important one, no doubt about it, but long-term implication of the market is very minimal. The message is stay invested and use the volatility to your advantage. That's the update. Going to be an exciting day today. Stay safe and healthy, and I'll speak to you tomorrow.